Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. Diplomatic and economic ties between the United Kingdom and China are on the mend and gaining strength. In a major deal, the two sides yesterday unveiled plans to further bolster China's currency in the international arena. Under the new arrangement, British investors will be given a quota of $13 billion to invest into China's still restricted capital markets. The Wall Street Journal says the move could give investors in London a reason to hold and invest in the yuan, and is part of a series of steps China has taken with a number of countries to increase the role of the yuan. Beijing has long kept a firm hold on the yuan as a way to temper volatility and control the inflows and outflows of capital. But leaders like Central Bank Governor Zhou Xiaochuan have been steadily making moves to broaden its use since 2011 as they seek to give the currency a higher global profile and eventually, in a few decades, challenge the dollar as the world's de facto currency. According to the Bank for International Settlements, last year the yuan jumped to the 9th most traded international currency after ranking 17th in 2010. It's projected that in just 2 years from now, the yuan will be the world's third most traded currency, a major jump in just 5 years. In June, the Chinese and British central banks signed a currency swap deal with the maximum value of 200 billion yuan, or roughly $32 billion, to promote bilateral trade and investment, as well as to promote the use of the yuan in global trade and finance. The deals are intended to make London a major trading hub for China's currency, its first outside Asia, and will likely give a boost to London's status as a financial center. Two British delegations arrived in Beijing on Monday, one led by the rather eccentric Mayor of London, Boris Johnson, and the other by the Chancellor of the Exchequer, George Osborne. In the UK, the Chancellor of the Exchequer is responsible for all economic and financial matters, equivalent to the role of Minister of Finance or Secretary of the Treasury in other nations. Ties between Britain and China have been strained since Prime Minister David Cameron met with the Dalai Lama in London last year, but the current British government says it has no plans for more high-profile meetings with the exiled Tibetan spiritual leader. One overture the British government made on Monday was a promise to relax visa rules for Chinese business people and some tourists. However, the diplomatic chill seems to have had little effect on trade ties, which continued to grow in 2012. Trade still managed to grow between the two countries, which reached $63 billion last year, up 7.6% from 2011. During the first half of this year, trade increased a more modest 2.6%. The New York Times reports that as Britain's relationship with the European Union has grown a bit more distant, the Conservative-led government in London has given higher priority to faster-growing markets elsewhere, especially China. Many high-profile investments from China into Britain have been made in recent years, such as at London's Heathrow Airport. A Chinese company has just announced that it will be part of a group investing about $1.3 billion in Manchester Airport. On Sunday, the British Energy Secretary Edward Davey said that he was close to securing investments in nuclear and other technologies from China and elsewhere in Asia, which will likely be announced as Chancellor Osborne makes his way to the south of China. You're watching Biz Wire on the Blue Ocean Network, China's first and only privately owned broadcast media. All of our stories can be seen on our website, BONTV/biz-wire. In just a second, we'll continue with more insight into the big picture of China's economy.